Hello, this is Legacy with Dad. We're on lesson 9, cash flow systems. Uh, in this video, I'm going to be showing how cash comes into my business, how I allocate it, split it up, how I have a half my section is used for building wealth, the other half is operating costs of the business, and how I put money in the savings to purchase more assets that creates bigger cash flow. Keep in mind, I'm showing this system uh, for my kids, okay, because I want to give a great outline of how I done it. This is not, uh, even though it's not financial advice, this is not, I'm trying to, say that you as a viewer has to do what I do. I'm just showing you what I do and that works for me. Obviously, do what works for you, but this is mostly just for my kids. My cash flow system. This is what I personally do. I'm just showing you my children that this is how I do it. All right. So, well, first thing that happens is there's a sale. Okay. Once the sale come in, I use a merchant service called Square. Okay. I've been with Square since they pretty much started. But one thing I really love about Square is that they branched off. Okay. They have the merchant services, but they also open up checking and savings account. So this is where it becomes pretty cool. So I opened up a Square savings, okay? And then what I do is I transfer 10% over from every sale that comes in, right? Every sale that comes in, 10% goes into that savings account, okay? From there, 90% goes into my main business account, okay? From there, I have a savings account and I have my bills account. Okay, now remember, 90% comes in here. So this is what's going to pay for all my operational costs, my payroll and bills. Okay, so from here, on Wednesday, anything that's over $2,000, I move over to the bills account. Okay, so there I pay all my bills. I pay all my bills, and I also run payroll. Okay, so now once all my bills are paid and my payroll is all ran and everything is done and we're pretty much at the end of the month, what's ever over $2,000, okay, I move it over into that savings account. Okay, that's how this savings account starts to build. All right, but it has to go through this circle. Up here is where the magic happens because that 10% comes off the top of everything and it goes over here, like I said earlier, into that Square savings. From there, the money piles up in Square savings, and then I do something really great here. Okay, the first thing I do is I transfer $500 into Betterment, which is my Roth IRA. Okay, the second thing I do is I take 10% of this total and move it over to my Fidelity corporate account. Now, why is a great tool for me to build wealth? One, I'm maxing out my Roth IRA every year. And if anyone's wondering, oh, you're taking money out of your business and putting it in the Roth, I am an S corp, so I have to under the IRS tax code, I have to pay myself, but I also can take out an owner's distribution. So what I do is I mark this $500 under my my cash flow statement as a owner's distribution. All right. So that's just a way to auto put away money that I can write off. And I think the tax is like at the end of the year, 7.5% that I'll get taxed on that money, which will be 6 grand. Okay. Now this account here is a business account, is a business investment account. A lot of people don't know that this exists, and a lot of people don't know that you can use this to build wealth. All right. So in essence, that money flows through 10% a month, whatever's in here goes into this Fidelity account. This Fidelity account allows me to invest company dollars from sales on the stock market. Okay, so please understand, guys. This is the way I have my stuff set up. You don't have to do this part. A lot of you ain't gonna like what I'm about to say, but this is what I choose to do, and as I go through my personal journey. Okay, the money that you put into the Fidelity account is combined with your current funds that you have in your business account, meaning that you add it all together at the end of the year. Whatever's left, that's what you're taxed on at the corporate tax rate. The gains from the Fidelity account is looked at as business income. So you are taxed on that as well, upwards of 28%. Okay. Like I said, a lot of people are going to like 28% taken out of my gains every year, blah, 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 blah. You got to look at the bigger picture, guys. And the bigger picture is that this account is still going to make you money. It's still going to build wealth over time. Guys, you got to look at the long term, and that's the way I'm looking at it as. And I'm just going to just say it. If I raise $10 million, okay, in this account at 8%, 8%, like the stock market can hit 8%, okay, earned gains, all right, that's going to generate 800,000 in gains, okay. So with that 800 grand, I'm gonna go minus out 28%, which is the tax hit. That leaves me with $576,000. Now that $576,000 at that point is free and clear. I can do whatever I want with the $576,000. Okay, mind you, that's a low 8% interest on the money. That's 8% gains on the money per year. Which is very low. That's fine. But the point is, at the end of the day, is that's 576,000 after the 28 tax hit. That's free and clear money. I can retire off of that if I choose to. A $500,000 a year, I can retire and be fine. Okay. Also, it never runs out. And what I mean by it never runs out is every year, as long as the stock market gets 8%, it's going to pay out 576,000 per year. Okay? Guess what? When I die, I will this asset over to my kids, and then AW driving school will pay my kids, 576,000 per year forever. It will never stop. And that's why I'm choosing this system, and that's why I love it. So this is a very good vehicle that I'm using currently to build wealth for the long term. Okay, I'm still maxing out my Roth, but this one right here is going to put me in retirement more sooner than I can with the Roth. Hypothetically, once this account reaches, let's say, 50,000, all right, then you're putting $5,000 a month in this Fidelity account. Your wealth is going to grow tremendously, especially with the interest rates. Uh, but this is my full system of how I allocate dollars where it goes. Now, do you have to follow this system? No, you do not. You can do your own way. This is just an outline so my children can see how I mapped out money as it comes into the company. This is something that they can use in their own company. They can model what I do, or they can take and create their own system. It's pretty much up to you. But this is how I do it. And so far, I must honestly guys say, this account is growing ridiculous. because I'm a bigger business, so obviously more money is getting generated because of sales. Okay, so this account is growing bigger, which means this account is getting maxed out, and which means that the Fidelity account is taking everything else with the 10% and is growing as well. Over here with the 90%, I'm cutting my income down to 90% by moving it over here. And then my main deposit goes over to bills. Once bills is paid, whatever's left in savings will grow savings. But what makes it great is I can take the savings and buy more assets. Like recently, I just bought a semi truck. I'm about to buy another trailer, and then I'm gonna rebuild up the savings to go buy something else. Okay. And then when you get more savings, which increases sales, okay, and it cycles back around, and now you have a complete system to build wealth. This Betterment account, I don't pay attention to because it's automatically transferring it every single month. The only thing I do have to do is go into the corporate account. I have to transfer the money to the corporate account and buy each one of the funds single-handedly, which I'll create a video on what I actually invest in, which is very simple, very boring, to the point. QQQ is actually one of them. That's like one of my favorite. I think that's 45% of my portfolio. I do have bonds, Fidelity, total bond market. I do have small cap, mid cap, large cap, and international ETFs. I don't do individual stock. Every person has their own way of investing. Me, I don't have time to read white papers and go through all the headache of seeing what Target or AMC or all of them is doing. I don't have time for that. So I try to create systems that make sense, so that way it's easy for me to be disciplined. This system keeps me disciplined. Money comes in, goes to Square. Square automatically sends it to Square Savings. The rest of the remaining 90% goes here. Betterment automatically pulls it from Square Savings. Fidelity, once a month, I go in and buy all the shares that I want. Over here, comes in the main deposit. Anything over $2,000 goes to bills. I pay all my bills and I pay payroll. Then whatever's left after that goes into savings. After savings builds up, I go and buy assets. So you can see with this system, you're going to build wealth very quickly. But this is how I do it. Definitely talk to an accountant. Explain your unique financial situation to that accountant, and then your accountant, and if you want to add on a financial planner as well, you can do that as well. But mostly, I just work directly with my accountant, and I sit down with the plan, and I say, this is what I want to do, and this is the plan that me and that accountant agreed to that will work best for me for what my goals are. Definitely you want to sit down with an accountant yourself or a financial planner yourself and figure out what works best for you. I'm just sharing this as something I've done for my children so they can understand where I came from and how I built the wealth that I'm building. To my children, hopefully you take in this information and you can use it, you can adjust it, but I just want you to have a general understanding of what's going on in my mind when I created this financial plan and how I followed it all these years to build the level of wealth that I hope to achieve in our legacy. Do what works best for you, children. Okay, this is just an outline of what I've did. That don't mean it's going to work when you try to do it. Anything can happen. Bitcoin can become the new world currency. Stock market breaks apart, and NFTs are popular now, and anything can happen in that time. But I just want you to pay attention to the structure. The structure is what's most important. Structuring money coming in, where is it going allocated to, what pots that we can utilize to help it grow. That's the most important for me, for you to understand that that's what I'm trying to achieve here, is to just show you a blueprint of something that you can follow. Later on in life, you can make all the adjustments you want, but I just want you to get the core lesson, which is know where your money is going and know how to separate it in the pots so that way it grow, and as you grow your main asset. I love you guys. I'm out of here.